Traders, good afternoon. All that risk he told you about, that plus please put your stops in first. This is a very risky game that we play, and always have protective stops in before you enter into any positions. Jeff, I wanted to add that to your disclaimer if you don't believe it.
You got it. It's always good advice.
All right, so welcome traders. So you're looking at a crude oil chart. My name's Oscar Carboni, by the way. If you haven't met me before, hopefully you'll like what you'll see here and come hang out with me in my free live chat room, which I keep open every day. But this is about where markets are and where they should be going and what we can use to possibly make some money, at least gain some points, if you will, over the next few days. So you're looking at crude oil, and crude oil has had a steep drop recently and even got below the 200 bar moving average, which is that average right there. And when crude drops, it is an immediate worldwide stimulus in our pockets, immediate, every company, everywhere, even Tesla, who has electric cars. When the price of energy drops, it drops for Tesla, it drops for everybody. So it's a really good thing to have happen when crude oil puts in a spike down like we see. So I've been contending since crude oil has dropped this low that the drop in crude, as well as the combined, and you'll see it here, rally in bonds, we've had a very smart rally in T-bonds. T-bonds went from 107.04 all the way up to 115.23. Now that means interest rates are dropping at the same time the price of energy is dropping, and I have contended for the last 6 or 7 videos in a row, and in my trading room for the last 4 or 5 days, that this will force the market to go higher. The fact that interest rates have dropped, bonds rallied, interest rates dropped, and the fact that crude oil has dropped as far and as quickly as it has absolutely buoys the stock market. It will happen. And my advice last week and all last week was, it's not if, it's an absolute. It will happen. It's now just a matter of time. It'll happen this week. Last week I was saying this, or into the week we're in now, this week. So it will either happen late last week or sometime this week. But we knew that this sort of action would force the market higher. So if you don't know how that works, by the way, interest rates, if you have bonds dropping, if these were T-bonds over here, and that's going to be a little big, so I'll make that smaller for us. But if these were T-bonds here, and on the other side, you have interest rates. Let's make it IR so that we get it. You have interest rates on one side, you have T-bonds on the other, and what that will usually do is make the interest rate go down. So when bonds go down, interest rates go up. That's the way it works. But this is a teeter-totter. Let's say we're out in the playground right now. When bonds go up, interest rates go down. The teeter-totter goes the other way. And this is what starts to happen. Interest rates drop when bonds go up. Now, Jerome Powell and the Fed does not have to say a word. They do not have to move rates. When bond futures go up, interest rates go down automatically, inherently. So if you've got rates going down and the cost of energy all over the world getting cheaper, that will cause the stock market to go higher. And what happens? The stock market goes higher. All of this was in place last week. We talked about it all week long. And what happens? We are on Wednesday, right? Monday, Tuesday, Wednesday. The market did go higher exactly as we expected it to. Now, you're looking at the E-mini S&P, which was forced up higher by those two things I just showed you. Crude dropping, interest rates going down while bonds rally. So I pulled the S&P chart when we were somewhere here at the 200 bar moving average. And I said, you want to see something interesting out there? Here's more proof that that drop in crude is going to force the market higher. The last time the E-mini S&P came down to the 200 bar moving average, it dropped down, got to the average, and it had 6 bars under the average. 1, 2, 3, 4, 5, 6. That was it. 6 bars under the average, made a little weird formation and exploded. Like a nice little bird face there, huh? Well, watch what happens here. Oddly enough, we get under the 200 bar moving average, which is this teal average, for 6 bars. And on the way down, we put in a little formation the same way as we did on the way back up, and look at that rally. Now that might look simple because I made it look simple for you and to you, but it was a find that, you can kind of see it for your own eyes. And the reason why I showed you in such a simple form is because it actually is that simple to see what's coming next if you know what to pay attention to. Granted, I was not long for this. We tried to get long this morning. We missed it by a few points and it exploded without us, but there's tonight to tomorrow, kids. We're day traders. But it did do exactly what we expected it to do. Analysis works better than any other form I have ever seen of trying to call the markets. Conjecture, reading the news, trying to get the fundamentals out of the news and disseminating those fundamentals and deciding if that's a buy or sell is almost impossible with the fire hose of information that comes our way. But the simplicity behind these charts and the fact that a chart brings in that whole entire fire hose of information and puts it in a daily bar, which is simple for us to read and should give you what's coming next. And it almost always does if read properly. What else is going on here? If we take away this wacky voodoo that I just showed you and pretend that doesn't exist, in a much larger context, I believe we are looking at a monstrous bull flag. And let's darken this in so you can see what I see. Now, a flag does not have to be perfect. It does not have to be completely symmetrical. It just has to look like some form of a flag. And if you ask me, that's a very long extended flag that hit the 200 bar moving average. This is a long extended flag pole, and this projects up over the previous all-time highs as we move forward. And the interesting thing, if you come back here with me a little bit, is, once again, if we get rid of the voodoo, which we will do, and we grab some trend lines, you basically did the exact same thing. You put in some sort of a parallel channel, came under the 200 bar moving average for 6 days. We can call this a flagpole if you want. All right, we can go like this and say some flagpole to a flag. It goes under the 200 bar moving average for 6 bars and explodes. Well, here we are, formation drops under the 200 bar moving average for 6 bars and starts to explode. That, my friends, is what you call a repetitive pattern, and that is what we are in right now. Nothing goes straight up. You'll have your pullback days, but we're in for some upward movement, and let's see if there's other charts to prove that. Let's go with this guy. Your NASDAQ. NASDAQ did the exact same thing, came down to the 200 bar moving average for 1 session and exploded. See the arrows, right? I don't really have to put the trend lines there for you to see the big trend on the way up. And this nice pullback right to the 200 bar moving average for 1 bar, just like here, and away you go. Now we're above the trend channel, which very well could be just like the S&P. Top of the flag, some weird sideways flagpole, fine for me. Nothing goes perfectly, right? So looks like a flagpole type thing, or just a big channel if it's not a flagpole, bouncing off the 200 bar moving average. Now, what happened the last time we bounced off the 200 bar moving average? We went up this far. We went that far the last time we bounced off this 200 bar moving average. It put in a channel and exploded. Well, we just hit that 200 bar moving average, and what are we doing? We're putting in a channel, and it is starting to go. So for the bearish traders out there, I've been calling this bullish for full year with pullbacks expected, of course. We've got a target much higher for the end of the year, which we could get to if this continues. But this is bullish, and the fact that they're not raising interest rates anymore is extremely bullish overall. That's your NASDAQ chart. What else did we have in this pile of charts? All right, so other things that are happening that you might want to watch out for this week is gold. Gold is having a battle between the 50 bar moving average and the 200 bar moving average. It is just having a battle up here. I don't know if that's what it wants to do. Let it have its little battle. Our job is to watch what it does and react when it gets out of this area. Now, which way should gold go? And the should is the wild card here because no one has a crystal ball. No, I don't know about that. I actually have a crystal ball. You know what? I have a crystal ball and I've got a coin that I can flip. It's got to buy and sell. I can just flip this, and we could always make calls that way if we want to, because there are some people that think technical analysis is as good as flipping a coin. I have proven throughout my life, using social networking, once that came to life, that this is the best form of analysis that ever existed. I mean, the charts are the best way to get to where you want to go. Who's reading them and how you read them is, that's the important fact. But they will show you. Now, which way will gold go? The likelihood is that all you need to do is watch one other market and it'll give you your exact cue in gold. Watch the dollar. Look where it is right now. It's a powerful average. It seems to always keep this market in some kind of check or allow it to go higher. It's always there when something big is going to happen, and it's never there for anything else. It is there now. Watch this area. If the dollar breaks through and settles for 3 days below that average, gold goes up. If the dollar holds that average and starts to move higher, it could put weight on gold. Which way should it go? Well, right now, it looks like the dollar's in a little bit of a tailspin. It may have to penetrate that average and move down further. But I don't tell markets where they're going. I allow them to tell me. We need a settlement to see where it is today. Today's bar is not in. This is as of yesterday's bar. First settlement will be today to tell if it's above or below that average, and then watch it from there. And it should tell you what you're going to do with gold. Then we've got the stock pops up that was on our list. And if you've got questions, please hold them. I'll be more than happy to answer all. Facebook, Meta, if you will. You're in a must-hold area right here, right now. If it holds this area, gangbusters higher. It looks like it could literally move a lot higher before the end of the year. If you fail to hold this must-hold area, well, you know what happens with a must-hold area when you don't hold it, right? The traders will come in, the street will come in and pound this thing down to the average again. You've got to hold this area. How do I know that? Look what happens here. Where do you get to? When it finally gets back there, it doesn't get through. Where do you get to? It's here. It just made it through for a bar. Very, very, very good. We want to see that. But it needs to hold. It needs to settle above there for a few days, and then we know we can look for upward projections in Meta. I've been bullish on Meta for quite some time, so I have to assume it's going higher. But what I think means nothing. What the charts tell me day by day is what will do. So that's another chart that was on my radar. There's only about 2 more, and I will open this to discussion. We also have PANW, and this goes out to Aiden in my trading room. Aiden asked me today for PANW, and I told him, of course, come to the webinar, we'll take a look at it. I love it. Look at this chart. What is there not to love about it? And this average that seems to just, I mean, you couldn't ask for a better average. It was like it was invented for this chart. It is just absolutely perfect. And I just did that. Just make that right. Open labels back in so we can see them. Oh, we lost all our labels. Sorry to say, kids, that is somehow I lost my label in my. But let me relabel that for you. PANW's got a target. Your PANW target, as I see it right now, looks to be 278 on the upside. And that's not a top, that's a target. Don't know where it'll go from there. But for Aiden, 278 is your target on PANW. What happened was this average somehow switched on us. I don't know where it belongs. I don't know what it is. What it went crazy on us. Oh, I see what happened. I moved the chart. The average was not a. All right, we'll just cut it. So it's PANW, correct? PANW. Yes, it's right. So it's a great looking chart. Let me see if I can expand on it a little bit. And with or without the average, this is a very smart looking chart. Look at the way it just works its way higher. It finds newer, higher support levels as it moves its way up. And now I love what I'm seeing here. Right, you have this nice little new channel forming. I'm not making it a perfect channel for you. I'm doing an illustration channel. Had it be perfect, it would touch, you know, a bunch of bars, tops and bottoms. Illustration for you. And W is now moving higher. When it gets through this kind of a lighter resistance line, it will go up. So your target for now in PANW is 278. Once it gets there, we'll see where it wants to go. Now, nothing goes straight up. We know that, right? But that is your target for now. And we've got Apple. Look at this. Apple is stair-stepping higher. It's a stair-stepping type of chart. There's some name that I've given it. And what that means is if you'll notice, it runs up, down one step, runs up, comes down a step, runs up. It's been doing that for several years now. This average is a dynamite average, and we are above it at this moment in time. It usually keeps Apple in check. Apple is now above that average in a channel, so nothing goes straight up, but Apple looks pretty appetizing for the rest of this year as well. So that is what I had pre-set up. You know, a few charts I looked at today right before the webinar. I literally just looked at those an hour before the webinar, put them together, thought I'd show them to you. And now I'll open this up to questions, suggestions, whatever it is that you would like to do.
We got some from YouTube already.
Are you drowning in data, tied in trading knots, baffled by the bulls and the bears of the market? You're not alone, and it's not your fault. The world of trading can be overwhelming, but there's a path to clarity. Introducing OmniCamp. We believe in empowering traders like you with the skills and confidence to navigate the markets. Join Oscar Carboni for 4 transformative days. It's not just about techniques, it's about building a trading mindset that lasts. With 42 years of Wall Street experience, Oscar has designed OmniCamp to cut through the noise and give you the tools to trade with confidence. Don't let the markets control you. Take control of your future today. Limited seats are available. Apply now at omnibootcamp.com and let us guide you to trading success.
So Jay Reardon wants to know, is Santa Claus going to continue to come this year? He wants to know based on the chart. I'll actually read his question. Based on the charts, what do you project for RTY, ES, and NQ for the rest of the year?
Again, nothing will go straight up, but I think that this chart can answer it for us. You see this chart right here? It's a weekly NASDAQ bar chart. It is a very telling chart. I mean, talk about that crystal ball. It is the crystal ball of charts. It is just lately. It's telling us everything we need to know. Where will the market go? So even though we can go all the way back on this chart for history for a long time and look at a whole bunch of stuff, let's just go top day and see what's happened. Recently, weekly chart on your NASDAQ puts in this bull flag, little one. None of these bars existed. We called it a bull flag, hoped it was a bull flag, watched it become a bull flag, and it rallied up, only to then create another bull flag, which we have just broken out of. That bull flag, this one here, projects way up above previous contract highs in NASDAQ, which used to be 16 and change. We are going higher than that based on this flag. that one worked, holding the average worked. And if you don't think this flag is going to work, let me show you what happens when you hit the 200 ball moving average ever on a weekly NASDAQ chart. It goes crazy. We hit the average right here, and you got this. Okay, let's go back a little bit in time. It won't take you too long. It almost hits the average here, and you get this. Let's go back a little more in time. It almost hits the average here in 2011, and you get this. It does hit the average in 2010, and you get, now this is a weekly, don't forget, this might look small. This rally goes from 1745 to 2394 in your NASDAQ, right? And the only time it ever broke 200 was during 2008-9. Well, a little bit before that, but that doesn't matter. This is the whole world begins again here. You get under it in 2008, you get back over it in 2009, and from this point forward, you never break it again. If you get near it, you have a massive rally. We just got near it. What comes next? I hope that answers your question. That's what comes next, massive rally. Nothing goes straight up, but Russell, NASDAQ, S&P, I believe are in for some upside. Now the Russell is a small cap. Small cap stocks are in most favor in December for what's called window dressing. Window dressing is when Wall Street takes the stocks that are doing all right and pumps them up, and takes the stocks that weren't doing so well and rolls them out, so that their portfolio ends up with a whole bunch of winning stocks, which they push higher. And guess what that gives them at the end of the month? Year-end bonus, baby. That's window dressing. You will see it. I'm from Wall Street. I promise you it's coming. So the small cap are much easier to move than the large ones, and they are going to be all over these small caps for the rest of the year. In fact, the Russell 2000, the RTY, IWM has been leading the charge since this quick down move and then up move began. It has been the Russell. So I believe that the Russell at times will continue to lead us throughout the month.
George wants to know if you have any opinions on DAX and Europe.
I have an opinion on DAX. F-DAX, let's go. Of course I do. I don't let anything get past me. I've got to let DAX charts.
I knew you would, Oscar. I knew you would.
I follow the DAX. I don't put out DAX. F-DAX, where are you? Where is it? I always have it. So the DAX, let's just pull away this line. That's 4. The DAX had just broken out of a major resistance line, which I actually noted over these last couple of days. I've been watching it get closer to the line. Let's make it a little thicker. So check this out. This is your DAX. Let's just label it. And I believe in Metastock language, it's FDXZ3. If I remember, let's do that in caps. Should be your FDAX chart daily. And look at that beautiful trend line you just got above. In fact, I don't know if you can see it in this fashion. Let me do this. Does that help? Is that better?
It is for me.
It's for me too. I thought if it's better for me, it's got to be better for you guys. So I think what you're going to do is get up towards your 200 ball moving average in the DAX now. I mean, at least that's where it looks like it wants to go. So DAX has been surprising me with its strength lately, but it kind of makes sense because the US market has been building strength as well, and our bonds have been rallying, which is going to help the rest of the world. If our interest rates go down, it helps the rest of the world very quickly. So this is what's been going on lately in DAX. And then you get that right here, this breakout. I love what I'm seeing there. Now, traders, I am showing you what I call my simple technical analysis 101. It's what I would do if I was in pre-kindergarten, laying on a cot, drinking milk and warm milk and cookies, you know, remember those days? But, you know, the analysis to come up with exactly where to buy and sell is much more intricate than what I'm showing you here. but I want to show you the simplicity behind this. I want to show you the simplicity behind this, because what you may or may not realize is that Wall Street is watching the geometry on these charts the same way we are. Wall Street is watching this geometry right here. I promise you it is. This leading to this, leading to this. We draw, well, it already has the circle there. We draw a trend line, right? Well, so algorithms don't need the trend line because they know the exact price this is at, but they are following what we are following. I promise it's not all that difficult. And when they talk about algorithms, yes, there are some complicated algorithms out there, but what we find is the more complicated the algorithm, the more susceptible it is to a blowout when something happens in the markets. And the simpler the algorithm, the more useful it is. Geometry makes very simple algorithms. You know, an average is an algorithm, right? I mean, if you are taking a daily bar or a bunch of daily bars, adding the high-low close, dividing that by, let's call it 200, you are creating an algorithm. It's just a simple one. So it's that simple, only, of course, with steroids added to it, the algorithms that are out there now. But you can refer to the geometry, a trend line on a chart, believe it or not, as something that you know will be in their algorithm. Now, you've got to draw charts, like you've got to draw trend lines properly, otherwise what you think you're coming up with as their algorithm has nothing to do with what they're looking at. That's a different story, but they're only looking at the information on the charts, using the past information, putting that in and saying all of this stuff happened in the past. According to that, the next thing that happened was this. Now learn from that and tell me what should happen next. Well, that's just looking at repetitive patterns, and that's all we do. Repetitive patterns are the cornerstone for technical analysis. And as I've been showing you in each chart, there's almost always a repeating pattern, like the 2-6 the S&P chart, 6 bars below the 200 bar moving average, plus that little weird face it made before it went up. Just repetitive patterns. We make little faces and draw lines. Wall Street does the calculations in tabular form. There's no difference. So I promise you that this is the way to figure out where we're going. And that 200 bar moving average is probably the next target, or the top of this trend line, which is probably in about the same spot, is going to be your next target for Wall Street. And I'll bet you if I just stretch this trend line and the average, by the time you come over 2 or 3 days from now, let's say you go over 1, 2, 3 days, that average and that trend line will probably have come together, and that is going to be a target for Wall Street. So yes, they'll make it more complicated the way they come up with it, but they'll end up coming up with that analysis anyway. I just simplified.
All right, so we have actually 3 people asking about this one. Gary, Manuel, and Maverick all are interested in what you think about Bitcoin right now.
So I like Bitcoin. I have Bitcoin. Good. Just what I do. Nice clean chart. So this is Bitcoin. It's daily bar. And we have been, sorry, why didn't show? We have been touting Bitcoin for quite some time. When it goes down, I shut up and don't say anything. But when it's heading back up, I start to show people what, where, why, and how. And boy, this one is just starting to do some tremendous things. Now, there's a much smarter average on Bitcoin. I believe it could be like the 80. Let's go check that. Let's see if I'm right about the 80. Anyway, it doesn't really matter because we're above all the averages at this point in time. So let's just take a look at what it's been doing. So if you can go back, if I go back far enough, Bitcoin has been in something that's opposite of what it's in now, because let's move this out of the way. Bitcoin used to be in bearish channels, and it stayed in them for quite some time. You know, I'm not going to draw perfectly. I'm just going to illustrate. We were doing this, if you go back further, On this chart, it came down even more from up above, right? You can see it came down even further. You'll see it if I go back far enough, no need to waste the time. We have been in downward channels for quite some time. Then we got blessed and came out of the downward channels and put in some kind of what I would call a flat right here. It just sort of became flat, couldn't get out of its own way. And the bottom of that flat, of course, would be this. It just sort of went into a flat, and let's get this average out of the way. And from there, it has turned into a completely different market. From downward, flat, right? It finally stopped going down, went flat, and look what it started to do now. Long term, we're doing abstract picture for you. This is now what we're finding ourselves in. And this is definitely a different look than what we've had in the past. Let's see if that's some weird way of close enough to at least show you what I want to show you. Now, our channels, they're not flat anymore. They're not moving down anymore. Bitcoin is moving up, and it's not just moving up, it is creating what I like to call an Osarism known as an F-flag on the way. So, what Bitcoin is starting to do here, and again, we're doing simple analysis, kids. I'm not trying to show you where to get in and out of a market, just simplified ways to look at a market which is very powerful. But we're in some kind of an Osarism known as an F-flag, little jet out right there, no big deal. And you can stay in an F-flag indefinitely, literally indefinitely. You can stay in here for weeks on end, and then eventually it breaks out the opposite direction. But we can be in this for a while, and what you'll notice is it will go back and forth and gyrate. I don't think we're updated today, right? I think we can see a bar. What I'd expect is that Bitcoin came down today somewhere to this blue area and went back up. And let's add today's bar for the letter in for us and see that. No edition of today. No. All right, so we're not updated yet. I'm sure that update will come in soon. I would expect that what we've seen in Bitcoin is a bar that came down, tested this, turned around, stopped, and went back up. And I guess there is a place where we can check that real fast. Let me just see if I can find that for us. So
there was a big engulfing bar, it looks like.
Oh, there you go. It's exactly what happened. Look at that. So it did decide to come right down to the bottom of that bar. If we could update it on the other chart, you'll see it. And right back up we went. So it's a prettier look to it on the other chart. The other chart was drawn properly, this one wasn't, but you get the idea. It came back down to the bottom of this and went back up. That's pretty crazy. So we did end up with a bar that looks like this today on Bitcoin. And I think we stay inside this flag, F-flag, if you will, and move higher. And if there are any of you out there that don't know this, 2.7, maybe 2.6. In about 2.2 years and 6 months, we expect Bitcoin to be trading at 85,000. So I know that might sound crazy, but when Bitcoin was about 8,000, we made a projection of 35,000. Took 5 years, exactly the same 5-year projection. And within the 5th year, it went from never been over 21 in its life, it went right up to 35,000 in our 5th year of the 5-year projection. Then we recalculated. It's been just about 2.5 years of my newest calculation, which is 85,000 Bitcoin, 2 years, 6 months to go. I'd be shocked if we don't get there. You know, I've been watching Bitcoin since the day it was born. I've been able to analyze it since the first bar it's ever had. I would be shocked to be wrong on the analysis that came from it, but that is what we do expect long term. Hope that helps on Bitcoin.
T wants to know what's an Osarism.
Osarism is something that I could never, it may be a formation that showed up that I had never found in a book or never found in any study I've done in my entire life, and would be a new style formation that would show up out of nowhere. And it's got to be a good 10 years ago now, but about 10 years ago, this formation showed up out of nowhere. Well, makes it oddly different is that if it were a traditional bull flag, it would look like this. It would look like that. That's a traditional bull flag look. Well, what's wrong with it? Well, what's wrong with it is it goes up instead of down, right? So I didn't know what that was, and for 5 years I qualified this thing until I finally figured out what it was. And it's called the F flag. And the problem with the F flag, well, there's two things. It looks like an F, so to speak. And the reason why we call it an F flag is because usually at the end of this F flag's life, if you're in the trade without a stop, you will get F. It's basically what happens. That happens to you if you're in the F flag for too long. So, but it could stay extended for an uncalculable amount of days until it finally breaks down from it. So didn't know what to call it, qualified it for 5 years before I started to show it to people, and now I've been showing it for about 5 years. So that's an Oscarism known as the F flag bullish, and there's an F flag bearish, which would be that what you asked, which would be if you had a flagpole coming down, and if it was a bear flag, it would kind of look like this. Right, and that would be sort of a traditional textbook bear flag. These are bars coming straight down, you fill in some bars and then it drops. But the Oscarism bear flag does this. Instead, you get trend lines that come down at the bottom instead of up. And I thought, well, what could that be? It doesn't make any sense. And once again, it was the exact opposite, by the way, of the bullish one. And I qualified it for just as long, and I do know how to use it now, and that would be an Oscarism known as the F flag bearish.
All right. T wants to know what is your go-to time frame for when you're day trading, and is it different when you're determining the up or down trend?
So, an interesting thing about trading and analyzing. Let's go back to the UVD S&P chart. If we can find that. It should be seen. So there are many people who will take a look at a daily bar, and then they decide, by the way, let's put a little illustration back. We got to have this bird back. Somebody had mentioned a bird formation to me yesterday, which is a completely ridiculous made-up formation. So I figured I'd make a little bird face out of it. Anyway, you're looking at a daily bar, and if you want to decide what the action is for tomorrow, you basically want to use a daily bar to get tomorrow's daily range. But what people will do is they'll say, you know, I think I want to take this 5-minute chart right here, or whatever this might be, I don't know. And I am going to get into that trade, use the 5-minute chart to get into the trade, and then when it doesn't work in the first 5 minutes, I am going to resort to a bigger chart, like a 60-minute or a 2-hour or a 30-minute or even a 15-minute, and I'm going to stay in that trade based on the new chart that I came up with. That is what people make the biggest mistake doing. If you want to know tomorrow's daily range, use a daily chart to come up with tomorrow's expected range. If you want to be in a trade for 5 minutes, put on a 5-minute chart, put a trade on. 5 minutes after you're in that trade, if you're still in, you need to scalp out. You're using the wrong chart. So if you want to know what to do for the daily range, use the daily chart. If you want to be a 10-minute scalp, use the 10-minute chart. If you like 30-minute trades, use a 30-minute chart. But you're not supposed to use a 30-minute chart to hold on to a trade for 4 hours. That's a 4-hour chart. So if you want to know what I use the daily bar for my day trading. I do not go smaller ever, unless someone in my trading room says, Oscar, I've been looking at this chart and I don't know what it means, and I'll help them, but I don't want to see that chart during the day, because that little daily bar chart, that little time frame chart, 5-minute, 30-minute, it's going to have a lot of bars in one day, and those might go down a little and back up and scare you. But your daily bar is going to have one bar, and it's not going to do anything but just be a bar. So even for your nerves and for keeping out emotions, you're better off with the daily.
All right. Blue wants to know if you consider volume in your analysis or just pure price action. And I could answer that, but I'll let you.
Pure price action today is all I use. Volume I used to use for many years until there were too many other derivative products to trade. So what do I mean by that? It used to be if you wanted to know what they were going to do in soybeans, you went and seen what the volume was in certain months, and the volume was picking up in November and not in January. You can sort of do spreads, and there was no other way out. If you wanted in Jan, you had to get out of January, or you could be tricky and get out for November, but there was really nothing else one can do. Then the advent of just about every derivative you can think of, including options, has come along over the years. And right now, you can look at the volume increase in a market, only to find out that they're trying to make the market go down, not up, because they're buying like crazy in the market and increasing volume. But what you don't realize is they're buying 5 times as many puts somewhere else. So they're only using the buying as a hedge to try to push it up a little so they can get better fills in their puts because they want the market to go down. Volume has become confusing. So now that you can't tell if the volume is getting in or getting out of the market, I use price action. I'll only use volume around rollover time to know when to roll my contracts December to March, March to June, whatever needs to be rolled over. That's what I'll bring volume.
All right. Let's see. MDSZJ wants to know, do you think the rally we are having is likely to go on until Christmas?
Yes. Nothing goes straight up, but I think the fact that the price of crude oil has dropped low enough, which dropped even further again today, and our interest rates have stabilized, and I think that gives what we need to buoy the market higher. And there is this. Before this whole market drop started, when we were in gangbusters rallying until the first time the Fed raised rates, they did a whole series of videos to explain that the Fed is getting ready to raise rates. That means the top of the market will come in, and we will drop slowly. And the moment the Fed takes their foot off the brakes, it will just go back out of control. Why? When the Fed came in to raise rates, there was nothing wrong with the market at all. It was just going up too fast. Real estate was going up too fast. The market was going up too fast. So what did they do? They put their foot on the brakes. Let's slow it down a little. It was actually a train running on a track, starting to go so fast you could see the red friction on the tires on the train tracks. You know what I mean? It was moving so fast, our economy. So the Fed came in and put their foot on the brakes. But nothing was broken, nothing has broken, which means the moment they take their foot off the brakes, the train picks up speed again. And that's what you're seeing now. They just told us their foot's off the brakes and the train's picking up speed again. So yeah, I think we will go higher. Nothing goes straight up, but we'll go higher for the rest of the year.
Sonny wants to know if you have an estimated target for the end of the year.
Okay, yes, absolutely. Now, it might sound crazy, but when we were trading here, I put the target out. So we have a target that was literally brought out when we were trading down here at 3,800. So S&P, the beginning of the year is 3,800. And I gave a target, which people thought would be insanity. Let me change that to 3,800, please. And I'll type that target here for you as well. So we were at 3,800, and I came out with my year-end target, which I do every single year, at the beginning of each year. And you know what I told them the target would be, Jeff? This is something insane. 5,300. So I said this thing could go as high as 5,300 this year. Now it went from 3,800 to 4,600, 4,700 in 46, 47, just depends on if you're looking at SPY or futures. So we've already gone up almost 1,000 points. Now, can we get to 5,300? We're at 4,500 now. Do you know where we were? 1, 2, 3, 4, 5, 15 days ago? 4,100. We've already gone to 4,500 in 15 days. We've got 6 weeks to make it up another 500 points, and then we're right in my zone. So I think we're going to get somewhere near my target, even though it sounded ridiculous and people, thought it couldn't possibly happen this year. Once again, I only use charts to come up with these targets, and we've been right. If we hit it this year, Jeff, we're going to be right for 15 out of 16 years, our year-end target in the S&P. Amazingly, using the chart alone without any other input at all.
That's great. Here's a question I really like from Fritz. He wants to know, how do you play stops?
Omnicam.
Okay.
You want to learn? You know, I can only show you guys so much. You want to know exactly where to play stops? You got to come to my Omnicam.
Well, actually, somebody else was asking about OmniCamp. T wanted to know, does it cover Forex, options, etc.?
Absolutely. So OmniCamp, if you don't know what it is, Jeff, hopefully you'll take care of this when we're done. But OmniCamp is a 5-night, 4-day session held here in Las Vegas, where you literally will study with me in my home office, literally for a whole week. And yes, it applies itself to futures, stocks, certainly Forex, because Forex is just the universe of futures. So yeah, absolutely, and it applies really well, to be honest. Single stocks it works as well on as it does indices and ETFs, and Forex, again, no difference to me. So it would work for you. It's worked on just about any asset class I've ever applied it to, including when Bitcoin came out. I wasn't sure if my brand of analysis would work on that, but we've made some fantastic calls on Bitcoin using very same analysis.
Can we give out? I thought you had an OmniCamp site, a site just set up for OmniCamp, or maybe we can point to where it's at on your. Also, love Led Zeppelin.
I was cranking that 5 minutes before this weapon. All right, so let's go to OmniCamp. Show you that. And what you can do is, if you want to spend 5 nights, 4 days here, here's what, before I even get into any of this, you know what I'll tell you? If you have something to show somebody that doesn't work, or sell somebody that doesn't work, you know what you don't do? You don't invite them to your home where your wife and kids live for 5 days. Show it to them there. You go to like a room in Chicago, you get a convention hall in Chicago, you make them fly to Chicago, you show them the crap that you know isn't going to work anyway. You get back on a plane and go home, they get on a plane and go home, and you guys never meet again is the likely event. I'm inviting people to my home office where my family lives to teach them something that will change their lives. You don't sell something that doesn't work for people at your home. So anyway, if you go to omnibootcamp.com, it's very simple. You can come here, it'll give you a quick video of what it is that will happen for you. OmniCamp, again, it's 5 nights, 4 days of study with me, and I buy you guys a new laptop, and food is included, and everything is included in this trip, including your transportation to and from the OmniCamp to your lodging. The idea is to keep you working with me from 8 in the morning until 5 at night, 5 days in a row with no interruptions. So you get brought to the OmniCamp house where you stay, to my office, we work all day, and you get brought back. And that is where I can absolutely give you 100% undivided attention and show you the methods that I've shown a handful of others, because I only invite 3 people at a time to OmniCamp, only a few times a year. But when I find those 3 particular people that I approve, I show them something that changes their lives. And you can just come here, start an application. It's really simple. Click through it. That will allow you to set up a telephone appointment with me at your convenience time. And from there, I can qualify you and see if I want to offer you an OmniCamp seat. The fact that it is in my home, I don't offer these seats to just anybody. It is very exclusive. We need to speak on the telephone for a while. I need to make sure that I want you to come out. But I promise you, if you do, it'll change your life. At least that's the reports I get from the other OmniCampers who have been out here for this course. So anyway, go to omnibootcamp.com and fill out an app there, or go to livewithoscar.com, which is kind of easy to do as well. That should be another spot I've seen here. If you want to go to livewithoscar.com, you can do something really simple for yourselves. There are no credit cards required at all whatsoever, no nonsense. If you come here, livewithoscar.com, if you do not have a registration, register. Or log in if you have one. If you register, we ask a couple of simple things. What's your name? What's your password? What's your username? Get your email, verify it. You'll look in spam. There are a lot of emails go these days. Verify that. And the next thing you know, as soon as you come back to the site, you'll come into my live trading room, where I call this I live here. This is Live with Oscar. You can see me right now talking to you on that camera. when I'm not using the camera that we're using right now to do this seminar, or webinar, if you will, that camera is in front of me in this live room where I can help you with charts, with analysis, with markets. I can give you trading recommendations. You can ask questions. I can answer them in real time, and it costs you nothing if you want to hang out with me. And I do that because I used to be in a trading pit where I had hundreds of friends hang out with me all day. And now, since we went electronic in 2006, I've got to sit alone. This room helps me sit with the crowd, so I let you kind of look over my shoulder and just be with me. So go to livewithoscar.com, fill that out. Go to Omni Bootcamp if you're really serious and you want to learn how to get this right. This will be our next Omni Camp date, and you will train with me personally if you want to come out.
With OmniCamp, one of the things that I think you're underselling, and Dan Tipton apparently agrees with me in the comments, is the quality of the food.
So what Jeff is referring to is, I have people that will come to an exit interview after OmniCamp and say, Oscar, I want to tell you how I felt about camp. And then their exit interviews, I'll watch them. And almost everyone talks about the food. And the food was great. Oh, we love the food. And I go, 5 days of education with Oscar, and I don't hear a word about it. So they seem to love the food. I think it's great.
Yeah, I think we have time for one last question. And this one's probably the most important. And I think so that I don't get it out of context, I should read the whole thing.
Okay.
Oscar's not only very informative, he's entertaining too. He's got so much energy. I'm wondering, what do you eat for breakfast?
So you might not believe this, but I don't eat at all until the markets close. No breakfast, no lunch, no anything. I'll eat dinner after the markets close. Take vitamins every day, and guess I'm high on life. These charts get me excited.
Cool. That's it. I think George says, will a big bear market happen? It doesn't seem to that the charts are saying that.
All right. So of course, there's always a fundamental that can be thrown at us that no one can foresee. Generally, the markets see the fundamentals coming first. But I mean, let's say the war gets out of hand overnight. Somebody uses a much bigger weapon than anyone expected. Yes, something like that, of course, is going to cause a knee-jerk reaction. But if we stay basically in the zone we're in, there's a couple of wars that are going on. The markets absorb them now. If we stay in the zone we're in, we're going up, kids. The U.S. Be bullish on the United States.
Unless the Fed does something, right?
Well, the Fed basically has kind of signaled to us lately that they're in a little bit of a holding pattern now to see if what they did can continue to tamper down inflation. I've seen it come down. I don't know about anybody else, but compared to where we were a year ago, inflation has come down a lot all over the place.
All right. Manuel says, and I agree with him, great. Again, thank you, Oscar.
Well, thank you. Thank everybody for showing up. Jeff, if you've got anything that you would like to present in my stead while I'm gone, please do.
Yeah.
Traders, if you want to hang out with me in that live trading room, again, we're not asking even for credit cards. I don't like to play that shell game. Just come hang out with us. You know what I mean? It doesn't cost you anything. If you like the action, you'll stay longer. We'll move forward. Maybe you'll end up taking recommendations. But just come hang out with me and keep it coming.